Good day, my name is Rufile Matenje, and I'm one of your lecturers for TAX 3701. I'll be going through question 1 with you, which deals with the topic on value-added tax. As we go through this question, I will share some important exam techniques that may be beneficial to you in answering a VAT question. Before we get started with the question, I would just like to share a very brief overview of the VAT Act with you. Now, as per the VAT Act, there are two types of supplies. It's a taxable supply and the exempt supply. A taxable supply can either be taxed at a standard rate of 14% or at a zero rate of 0%. The Act specifically lists the zero-rated supplies as well as the exempt supply. Any other supply that does not fall under each of these categories will be by default taxed at a standard rate of 14%. Also, it is very important to note the time of supply to ensure that it falls within the VAT period. Without wasting any further time, let's read our required. In the required, we asked to calculate the VAT payable by or refundable to Skotana Proprietary Limited for the 2-month tax period ending 31 March 2014. We asked to note that where an amount is nil, please indicate and provide a brief reason. Now, it is very important that you provide this brief reason as marks are allocated in this regard. Let's now look at our scenario. Skotana Proprietary Limited is a South African company that imports luxury fashion clothing brands from overseas to resell locally. Skotana is registered for VAT on the invoice basis and has a 2-month tax period. The following amounts relate to receipts and payments for the 2-month period ending 31 March 2014. Where applicable, all amounts are exclusive of VAT unless otherwise stated. It is very important for you to note that Skotana is a VAT vendor on an invoice basis. This simply means they'll have to account for VAT on the earlier of receipt or accrual. It's also important to note that it's a 2-month tax period that ends on the 31st of March 2014. At this point, I would expect you to actually draw your timeline so that you can see where you are within the VAT period. We also told that all the amounts are exclusive of VAT unless otherwise stated. That just simply means these amounts that have been given do not have VAT, and for you to get the VAT amount, you have to apply 14% and not the tax fraction. Now, the next step is to look at our table. They've given us a list of receipts and payments. With the receipts, they will attract output VAT. I would suggest you write this down for exam technique purposes so that you remember as you are going through your question. For the payments, we know that it will attract input VAT. Now, the next step is to draw the skeleton of your solution. In your answer book, you can write out output and input. Now let's go back to the first point. The first point has cash sales. Now with cash sales, there's nothing that indicates that there is a note relating to this line item. Therefore, we just simply account for the output. Remember, you apply 14% and not the tax fraction. The next line item is credit sales. There's also no note next to it. Therefore, we just apply our 14%. I cannot stress enough how important it is to see if amounts are inclusive or exclusive of VAT. The next point is rentals. But when we look at rentals, we can see that there is note 1 for it. So let's go to note 1 and see what it says. In note 1, we're told that Skotana has excess floor space in commercial buildings that it lets to aspiring local designers. The rentals received from designers amounted to 62,400 for the 2-month period and constituted 8% of the total revenue of the company. Already, we know that commercial property is taxable for VAT purposes. Let's read further. As part of its remuneration package, the company lets residential accommodation to its employees at a discount to market value. The amount received for the period was 78,000 and makes up 10% of the total revenue of the company. From reading that note, we can clearly see that there's two types of property supplies, commercial and residential. We know that commercial is taxable and residential is not taxable. Let's go back to our solution to show our examiner that we know that commercial property to the local designers is taxable. Remember again, we still apply the 14%. Now with residential property, it is very important to show the examiner that you know this property is exempt. And you indicate with a nil amount so that you can get your mark. If you look at the question, they told us that 8% relates to commercial buildings and 10% relates to revenue. Now, as per the VAT Act, purchases that are used to make taxable supplies and non-taxable supplies have to be apportioned. So the reason why they're telling us that residential property accounts for 10% is because we need to account for expenses that only relate to the taxable portion. But we will see this later on when we're dealing with the input VAT. Let's continue with the question. The next part is the loan from Comma Bank. The loan from Comma Bank we refer to Note 2. Let's see what Note 2 says. In Note 2, we are told that in March 2014, Skotana opened 2 new stores locally. To finance the expansion, the company acquired a loan of 100,000 rands from Comma Bank and received equity contributions of 150,000 from the company's shareholders. If we go to our solution, the loan from Comma Bank will be exempt as it is a financial service. It's very important you indicate this to the examiner. The equity contributions, on the other hand, is a supply of cash. And this supply is not a supply for VAT purposes. Now we go back to our table. We've already dealt with loan from bank and the equity contributions. Now the next part is the indemnity payment. Let's refer to Note 3 to see what it says. Note 3 says, on 6 March 2014, a fire broke out at the Johannesburg branch and stock valued at 80,000 was destroyed. The insurance company indemnified the company with a cash payment of 80,000, inclusive of VAT. Remember, in the first part, we were told that amounts are exclusive of VAT unless otherwise stated. So in this case, they've explicitly told us that it's inclusive of VAT. Therefore, we apply the tax fraction instead of the 14%. Now, an indemnity payment for VAT purposes is a deemed supply. And therefore, we have to account for output VAT on the 18,000 multiplied by the tax fraction. We go back to our table to see if we've dealt with everything. So if you look here, we've dealt with all our receipts, and now we have to deal with our payments. Under payments, our first point is import of stock, and it's under note 4. Let's just refer to note 4. Under note 4, they tell us that on the 28th of February 2014, Scotana imported the Scavella brand of shoes from Italy. The cost price and value for customs duty purposes was 300,000 and the import surcharges of 2,400 were levied. The date reflected on the customs bill of entry is 4 March 2014. Remember earlier, I mentioned that it's very important to know when the time of the supply was. In this case, for import of stock, the time of supply will be the date on the customs bill of entry, which is 4 March 2014. 4 March falls within our VAT period, therefore, we have to account for input on this. Now, because this is from Italy, it is not from Botswana, from Lesotho, Namibia, or Swaziland. Therefore, we have a specific way we need to account for the VAT. Let's just run through this on the solution. So when we account for the import of stock, we first take the value of the customs amount, which was 300,000. We then take 10% of the customs value. 10% of 300,000 is 30,000. And then we also add the import surcharges. We were told that these amount to 2,400. And the total is 332,400. We then apply 14% because this amount is exclusive of VAT. And then we account for input VAT of 46,536. And that's how we deal with the import charges, import of stock that is not from any of the countries I mentioned earlier. Now, we've already dealt with note 4. We go back to our table to deal with the purchase of land. Let's refer to note 5. In note 5, they tell us Scotana purchased a second-hand building from a non-vendor for a consideration equals to 100,000. The property was paid for in full and registered on 16 March 2014. The open market value on the date of registration was 120,000. In this case, the time of the supply is 16 March, which is the date when the property was paid in full and registered. So this falls within our tax period. The value of the supply for second-hand goods that are purchased from non-vendor will be the lesser of the consideration and the market value. In this case, the lesser amount will be 100,000, and we apply our tax fraction. It is very important to show the examiner that you know that it's the lesser of 100,000 and 120,000 as marks are allocated in this regard. So the lesser amount is 100,000 and you apply the tax fraction and not 14% in this regard. And it is very important to know the difference. Now that we've dealt with note 5, let's look at the final point. They tell us that it's sundry payments and we need to refer to note 6. So let's go to note 6. In note 6, they tell us sundry payments comprise of the following amounts that are inclusive of VAT. That just simply means we're going to apply the tax fraction. This is very important to note. If amounts are inclusive or inclusive of VAT, as you can see in this question, that you would have lost a lot of marks if you didn't identify the difference. They tell us that the fuel costs, the bank charges, and maintenance costs relate to the import business as well as the property rental business. Remember earlier on, when we were talking about the rental business, we saw that 10% of this relates to residential accommodation, which is not a taxable supply. This just simply means 90% of expenses relate to taxable supplies. Therefore, for input tax, we need to apportion. Now let's go through the list of the sundry payments that they gave us. The first one is fuel at 14,250. So that will be times 90%, but because fuel is zero rated, we'll multiply it by 0, and that amount is nil. And you can even skip this part. You don't have to write this all out. You can just simply say it's zero rated, and you will get your mark. Now, the next point is bank charges. So with the bank charges, we will apportion by the 90%, and then we'll apply our tax fraction. The next on the list are maintenance costs of 5,700. Maintenance costs will also be apportioned, and we'll multiply that by the tax fraction as well. Remember, they told us that insurance premiums and subscription fees only relate to the import business, and the import business is 100% taxable. Therefore, when we're dealing with insurance premium, we won't apportion, as well as the subscription fees. We're also told that the subscription fees are for the purchase of international magazines and membership with fashion trend forecasting agencies to ensure that the company stocks up on the latest trends. Therefore, we will account for input VAT on these amounts. So if you look with the insurance premiums, we'll multiply this by the tax fraction. We do not apportion this amount. And subscription fees. Remember, our required asked for the VAT that's payable or refundable. So we still need to do that. So you sum up all your outputs. In this case, the total was 108,161. And then you sum up all your inputs. Which is 6896. So if the total output is more than the input, that means the taxpayer needs to pay SARS. Therefore, in this case, we'll say VAT that is payable is the 108,161 less the 60,896, and the VAT that's payable is 47,265. It is very important that you show the examiner your calculations so that if you made a mistake anywhere in the question and your totals are wrong, we're still able to follow how you got to your final answer and your conclusion. I hope I've given you a few tips that will assist you in answering a VAT question. Until next time, keep well.